Welcome back to the Real Estate Talk Show, your source for all things real estate. It's now time for House Calls, where we answer questions from you, the audience. As you can imagine, we get a ton of calls and emails on the topic of real estate investing. And on the last edition of House Calls, we talked about the most common types of real estate investment properties, such as single-family homes and multiplex apartments. And we discussed the pros and cons. But this week, I want to focus on some lesser-known investments, including then one that is actually RSP eligible.
Absolutely. Now we're talking, Simon. Now, we've had some feedback from our listeners that have been on the stock market roller coaster, and they're seeking other ways to invest their money. Now, the question that keeps coming up is how to invest one's RSP in real estate. And although you can't invest your RSP in real estate directly without collapsing your RSP, I know there is another way to do it. So, can you elaborate?
Yeah, well, there's several different ways. There's some, certainly more complicated than others, but let's talk about one which is quite simply a type of mortgage. Mm-hmm. Now, when you're giving a mortgage, you're actually loaning money. So you're not investing in something. And because you're loaning money, mortgages that are third party, in other words, you can't give yourself a mortgage, right, but you can give anybody else that's not related to you. It has to be arm's length. You can give them a mortgage, you can lend them money, and that is RSP eligible. But one thing that we talked about last week is a syndicated mortgage. And quite simply, you may have a developer, for example, Erin, that's, they've got the land. So the developers bought the land. The bank has come in and give them construction financing, and they're at the next phase in their project, which is they need money for soft costs, architecturals, legals, marketing, all of that stuff. Banks don't lend on soft costs.
They only lend on the hard.
They only lend on the construction costs, the more tangible stuff. Yep. And there are investor groups that will lend on the soft, but their rates are very, very
high?
Expensive. Yeah. So okay. What's evolved in the marketplace is syndicated mortgages, and there are several different companies out there that are doing it. And essentially what happens is this. Let's say the builder needs to raise $10 million. Mm-hmm. Well, instead of trying to go to one source for $10 million to these lenders that would charge a lot of money, they'll go to smaller investors that invest anywhere from $25,000 to $200,000. Really, there's no limit, but typical investors, $25,000, $50,000, $100,000. They group all of those as a syndicated mortgage. Yeah. And all of the investors are on title as having a mortgage, so they're secure on the property. And we're looking at returns of, on average, I would say 8 to 12%. Locked in, typically 2 to 3 years. So very solid investment, very secure.
Okay, what else you got?
Well, in terms of RSP investing, you can do traditional second mortgages as well, where homeowner just needs $50,000, $60,000. But that's a little more risky because it's on a small property and it's one homeowner that is already in financial trouble. Yeah. Now, you might get higher rates, but there's sort of, there's maybe a slightly higher return, but a little bit more risk.
But there's a lot of people out there that actually do a great business doing that, Simon?
Oh, absolutely. Yeah. But that's probably, I think, for a more sophisticated investor that knows how to understand, what's the loan to value, what's the credit risk in this situation.
So for our listeners out there, we certainly wouldn't guide them into doing that for your first time experience, but certainly something that can be very profitable once you kind of got your feet under you. Okay.
It depends on the investor if they're really risk averse, if they're the nervous type. If you lose sleep over losing $1,000,
don't be doing
this is not for you. Yeah,
all right,
kind of
good.
thing. Yeah.
Okay, well, what else then?
Well, in the wake of last week's show, we also received a number of audience questions about student housing as a viable investment opportunity. And although this is not RSP eligible, it's still a very popular vehicle lately. It's really grown in popularity. Now, there's really two ways to get involved in student housing. And one very, very common way, and what usually happens is, you've got kids going to university, so then you start to ask around and say, wow, it's expensive to pay for school, pay for housing. Why don't we buy a house, Johnny, and you move into one room, rent out the other 4 rooms to your friends, and we'll manage the property. It's still a fantastic investment, but the challenge with that is you're going to get
maintaining it too. Yeah,
you get all the classic, all the cliche. If you want to understand one of the challenges with student housing, watch Animal House. Remember that John Belushi movie? Yeah, that's kind of what happens in some situations. So all kidding aside, there are management issues, and Johnny should be really focusing on schooling rather than focusing on roof repair and collecting rents and chasing their friends and all of that. So that's one. Good cash flow, but has pros and cons. An alternative is what we call managed student housing. And one we talked about last week, for example, was Sage 6 in the Kitchener-Waterloo area.
Fantastic opportunity.
Beautiful. When you think about it, they really came up with a great idea. And they said, look, let's build a standalone, brand new construction condo complex. Let's manage all the rentals for the owners.
Fully furnished.
and turnkey, and they've done a really good job. I mean, they got a lot of common areas for the kids, so there's study areas, there's areas for entertainment. They got one room with a big screen. So the students are going to like living there. They're market rents. It's a type of construction that's actually even more soundproof than the traditional scenario. And from the investor standpoint, you're looking at prices starting at $189. And in terms of down payment, I can't remember the exact numbers, but we're talking like $40,000 spread over 3 years as an investment. So it's something that anybody can get involved in. But we've got details on the Sage 600 project on our website for those that are really, really interested in that kind of thing. Just go to realestatetalkshow.ca. But to answer these questions, it is a good investment opportunity.
We have time for another question, if you're okay with that.
Sure.
I know we covered this in the past show, but we received a listener question asking if there's a difference between rent-to-own or lease-to-own.
They're the same, yeah.
Right.
But to answer what it is, for those that don't know rent-to-own or lease-to-own, we'll call it rent-to-own. Imagine a rental property with higher than market rent, with $10,000 to $20,000 deposit up front, which you cannot legally typically get from a tenant. The tenant pays for all the maintenance and repairs, buys it back from you in 2 to 3 years for a fixed profit, and you get a return of 60 to 70% with no management issues. So the first question is, what's the catch? Well, there's no catch, but you know what it is? You get slightly lower returns than regular rent and hold, but it's a fixed investment, 2 to 3 years. The only catch is that in 2 to 3 years, you've got to get the money out. There may be a capital gains implication, or there will be, and you've got to reinvest the money. So, but it's an option instead of traditional rental properties because it's self-managed. It's sort of a hassle-free income property with a fixed return. And the beautiful thing is we do all the management, for the investor.
Okay. Now, Simon, for our listeners out there considering investing or maybe already investing in real estate and want to learn more, because everyone can use a little bit of coaching and some guidance, of course, right? You host seminars on a regular basis. So when is your next one? And can you tell us more about it?
Well, we've got one coming up in a couple of weeks. Again, you can just go to the website to see upcoming dates and so on. But in a nutshell, what we do is, we give people, I try to give people sort of the inside information, because there's a lot of media attention around the real estate market. It's up, it's down, it's sideways, there's a boom, there's no boom, Ontario's broke or the market is good. It really is confusing. It's confusing to us sometimes. So I first start by really helping people understand how to understand the media, how to understand the news around the real estate market, and give them a snapshot of how we evaluate markets.
Okay, and then what do you do?
Well, the first thing I explain to people is when you're talking about the Canadian real estate market, it's 1,000 different markets. Even in the GTA, there are little micro markets. So we show them how to differentiate the two and what to understand about each little market. So there's really a couple of people in the room. There are first-time buyers that are buying their first house or condo. We'll walk them through the process. Hey, where do I start? What do I need to understand about the numbers? Because everybody knows what they know, but there's stuff that we don't know to ask. Right. The stuff we don't know that we don't know. That's Absolutely. One of my favorite expressions. So one of the things we coach them on is understanding the team of experts that you can assemble to help you make all of these decisions. And I think that's probably the classic mistake that most people make. Okay, now besides first-time home buyers, who else will be in that room or different seminars that you host? Well, we have another one coming up in a few weeks, Erin. Okay. And, we've been doing this for many, many years. And typically we get, I guess, 3 different types of people in the room. We get first-time buyers that really want to know, is this the right time to buy? Should I buy now or wait? That kind of thing. And, what do I need to know? We also get investors, some seasoned investors, but we're also getting a lot of people that, they're sick of the stock market roller coaster, like as you said earlier. They want to put and they want to look at real estate. They know a lot of people that have made a lot of money in real estate and they want to know what's going on. We also get people that, they're not going to do anything, but they're just curious. And that's okay too. Because what we do is we educate people. How's the market? What's the right way to buy and invest? And, what are the pros and cons of all the different types of investments? I mean, we talked for 3 minutes on today's segment about real estate investing. We talked for 2 hours on this stuff. So we really go in depth, show you what you need to know from the inside, and we also show you where the smart money is going and what the pros and cons are and doing it the right way. And Simon, again, you have different seminars that relate to different subject matter, right? So it can really relate to those individuals, depending on their specific real estate needs, of course? Yep, absolutely. Yeah? Okay, very good. Now, Simon, I'm not sure if our listeners are aware, but in your spare time, you also coach realtors. So your program is called Real Intelligence. Can you tell us a little bit more? I don't know if I have spare time. I was trying not to laugh while I said that. Yeah, absolutely. I don't have any time. But one of the things we do, because we work with a lot of realtors in the GTA, and in my past life, I actually did a lot of coaching in the U.S. and Canada. But what we've done is we called it Real Intelligence because what we found is when you look at the most successful realtors, and most listeners don't know there's almost 40,000 realtors in Southern Ontario.
Crazy.
And the reality is, just like with any industry, there are some that are part-time, there are some that are full-time. So we focus on the full-timers, the ones that they're living this is their livelihood.
They live and breathe real estate.
Yeah. And what we've discovered when we look at and interview the top agents, and this is over 20 years over North America, we see patterns. We see what's called best practices. So we've created what we call the Real Intelligent Realtor program. And basically, look, if you follow the best practice of the best people, you're going to have the best results. So for realtor listeners, they can go to realintelligence.ca and they can get a little bit more information there.
So again, for our realtors out there, just to remind you, if you want to visit realestatetalkshow.ca, we have information on there as well.